This ends every Bitcoin bear market. No, really. Let me give you the context. The Korean stock market just dropped 45%. AI stocks that were the trade of the decade got cut in half. The single biggest unwind of leveraged tech positions since 2022 just happened in real time. In fact, this was the worst sell-off for high beta stocks of the century. Yeah, even worse than 2000 and 2008, if you can believe it. And guess what? Bitcoin didn't flinch. No dramatic new lows. No cascade liquidations. Not the 40K print that the 4-year cycle bros have been calling for months. The most severe risk-off event of 2026, the one that was supposed to be the final catalyst for the bear case, the nail in the coffin for the bulls, came and went. Bitcoin held above 60K. Bad news is not driving the prices lower anymore. We've run out of sellers. Now, that's either the most bullish thing that's happened in this cycle so far or the quiet calm before the storm. I know which one I think it is. And the data behind it could be the most complete picture of a bear market ending that we've seen in a while. Right now, the bodies are piling up and people are going to point to that and say, that is the beginning of the end. No, it's actually the end. It's bullish. 99 crypto companies have officially declared bankruptcy in 2026. The real number's probably double that. The quitters who shut down without a press release, who sold their Bitcoin to cover payroll, who just stopped showing up. Some of them have Telegram still active, but huge amounts of companies are gone. Digital asset treasuries, remember those? The hottest thing in 2025. Most of them are done. Stocks down 99%, companies closing entirely, some are liquidating the Bitcoin holdings on the way out. And the classic, of course, signal for an end of a bear market, exchanges closing. We saw BitMEX, Sendex, and Bitmart all close. These were all once top dogs. 2017, BitMEX was the place to be for trading Bitcoin. Bitmart was the top 10 exchange, Sendex was huge. All bankrupt, all shut down. Sounds catastrophic, but is actually the mechanism by which every bear market ends. All these forced sellers exiting permanently removes selling pressure from the market. All these bankrupt companies, it's good. We're purging the weak balance sheets. We're purging the leveraged players who couldn't survive. The businesses that only worked when prices are going up are getting washed out, and that's a positive thing. What's left when the purge is complete is a market held entirely by people who choose to be there, by the strongest players, the strongest apps, the strongest exchanges, long-term holders who survived the drawdown and didn't break. We even had a cold wallet hack. The cold card wallets have been exploited with losses over $100 million and climbing. Bitcoin still did not move under 60K on this news. By the way, if you're using Ledger or Trezor, you're safe. Cold cards just uniquely sucked. They were stupid in the way they set up their phrases. But anyway, different story. Look, right now, long-term holders are not selling. Record whale accumulation's happening. The long-term holder, short-term holder realized cap ratio is sitting at 3.9, approaching the historical threshold of 4 that has marked major cycle bottoms in every prior bear market cycle. Capital is concentrating in the hands of people who have demonstrated they don't panic sell, they panic buy at the bottom. That's the foundation that every recovery is built on. And then you have Tom Lee out here calling this at the bottom again. But here's what genuinely surprised me when I actually looked at Tom Lee's actual track record on bottom calls. Got the jokes kind of right themselves. He should get himself a YouTube channel, man. I'm gonna make the joke, but the punchline is more complicated than the bears wanted it to be, okay? There's a specific reason why his call this time feels different from the other 6 times before it when he's called for the bottom. Let's be honest about Tom Lee's bottom call track record because it's an important context. August 2025, bottoms in, Bitcoin drops 13%. October 25, bottoms in, down 25%. November 25, bottoms in, we're down 16%. January 26, bottoms in, go down 35%. March 26, bottoms in, down another 12%. May 2026, bottoms in, down another 29%. 6 calls, 6 drops. You might say, shit, we're going to drop again. Tom Lee's saying the bottom's in. Look, this man is not a market timer, okay? And yet he'll be right eventually. The bottom will be called by Tom Lee, and then it will actually be the bottom. And everyone who used his track record to dismiss the signal will have missed the entry. The question isn't whether Tom Lee is a reliable bottom caller. He's obviously not. The question is whether the underlying data he's pointing to, the long-term holder accumulation, the forced seller exhaustion, the on-chain metrics, is more informative than his timing. And the data is increasingly hard to argue with. There's only a 16% probability of $100,000 Bitcoin this year according to current market pricing, which means if it happens, the people positioned for it win enormously against the consensus. And the herd's usually wrong, aren't they? If the forced sellers are exhausted and the bottom is forming, the worst thing that you can do, of course, is to be on a platform that isn't ready for you when the move happens. That's why you need to get an account over at Kraken. When Bitcoin doesn't flinch during the biggest risk-off event of the year and then it turns fast, the people who made money on every previous recovery weren't smarter. They were positioned on infrastructure that worked when it mattered. How many times has your exchange shut down during a busy period? You want an exchange that doesn't slow down when the volume spikes, okay? You want a platform that doesn't gate withdrawals when everyone's out at the same time. You want Kraken. Over a decade in the market. I've been using them since 2019. They're regulated, they're audited. They have options trading, prop trading, stocks on leverage, UK, USA, EU, most major jurisdictions. You can get an account. When the move finally comes, and it will, it always does, you want to be there. You want to be ready. Sign up today. Use the link down below. Go get it. Now, This is the most important data point in the entire bear case debate, and it's getting almost no attention. You see, the Korean stocks dropped 45%. AI stocks are the foundation of 23, 26. Both these got cut in half. 360,000 Korean retail investors got liquidated when that happened. 1 million got margin called. The single most severe risk-off event since FTX collapse happened in a compressed 27-day trading window. Bitcoin didn't go to $40,000, not even close. The price held, no cascade, no new cycle lows, no forced liquidations. That's all been washed out already. If ever there was a macro environment designed to produce the bear case outcome, the AI trade unwinding, leverage retail's getting wrecked in Korea, institutions reducing risk across every asset class simultaneously, this was it, man. 4-year cycle bros, where are you? The 4-year cycle theory had its perfect catalyst, and it didn't work. That tells you something about what's actually underneath Bitcoin's price right now. The record rail accumulation, the long-term holder concentration, the structural demand from ETFs that absorb selling even when sentiment is terrible. And by the way, this last week we've had almost $1 billion of inflows. Not bad. The market tried to break Bitcoin, and it didn't break. You don't have to call the bottom and recognize that the downside scenario just had its best shot, and it missed. Doesn't mean it still can't get to 40K in October, but we're running out of reasons to get there. While the bear and bull debate play out in price, something quieter is happening in adoption that matters more than the next 2 years or 4 years or any 4-year cycle model or any of that BS. Look at the adoption. Telegram has 1 billion users with instant crypto wallets built in, not coming soon but live now. 1 billion people with a crypto wallet they didn't have to set up, connected to a messaging app that they already use every day. Samsung is integrating payments across 1 billion devices. The infrastructure for mass adoption, the on-ramp that is missing from every previous cycle is being built into products that people already use. Robinhood Chain's live and it's being very successful. People are making money on chain again in a way that reminds me of early 2023 when the first green shoots appeared after the FTX collapse when Pepe launched. People making money on chain is always good. It brings attention. People want to get rich in crypto. That's why they're here. When people start getting rich, other people pay attention. Other people bring their capital back. Attention brings capital. Capital brings the next cycle. The Clarity Act is still possible, even though it got delayed, which sucks. Hopefully we get it by the end of the year. 140 institutions are pushing for OUSD and stablecoin infrastructure. The regulatory environment that killed the last cycle is not coming back. And altcoins just reset against Bitcoin in a way that hasn't happened since 2018. 4 years of compression against Bitcoin finally unwinding into the kind of relative value setup that historically precedes the altcoin season that follows a Bitcoin recovery. The Korean stock market, it's a great indicator. Dropped almost half. AI stocks wrecked. Biggest risk-off event in years. Exactly when the bears needed it to happen to get to their 40K target. Bitcoin didn't cooperate. The bodies, all those companies going bankrupt, they aren't a reason to be scared. They're the reason that the floor is getting solid. Let me know down below if you're buying Bitcoin right now or if you're still waiting for 40K.